Mark, we have spent a lot of time talking about the BOJ this morning. We watched it weaken and weaken and weaken, slides to 159, Ueda talking and talking, and then all of a sudden the yen strengthens against the dollar, 157.51 it got to. What are you thinking is happening? What's behind these sudden moves?
Yeah, absolutely. I think an important disclaimer before I start here is that when I walked into the studio a couple of minutes ago, it was trading around 159.20. So I have no particular information on this move. But what does it look like? And bear in mind, I've traded dollar yen at banks. I've worked at banks, including Nomura. So I have some, familiarity with how intervention works. Most likely, I've got to reiterate, I've not seen what's happened here. Most likely, this is a rate check, which is normally the initial move that the MOF does, which is kind of going like, hey, where do you see dollar yen right now? And it's kind of a warning that, if you give us a wrong rate, we're going to suddenly give you a load of dollar yen. So it's kind of the first flag that they intervene. That's likely the move. How will we know the difference? Well, if it's intervention, they won't stop just now. They'll drive it quite a few yen lower. I would say probably maybe 5 yen lower. And given that leverage longs are short yen, they could really start a bit of a stop loss move. So if this is intervention, then the initial dip in dollar yen won't be all we'll see. We'll see follow through later on today. So that'll probably be the first check of whether this is just a rate check, whether this is a bank pretending it's a rate check or intervention, trying to get some stops going, or whether it's actually intervention. Now, the extra bit that's kind of interesting here is that it would be kind of weird time for intervention straight after the Bank of Japan press conference is just finished. So I'm a little bit suspicious that this might be just some other player in the market trying to do a bit of a head fake here. On the flip side, the Bank of Japan, and I said this is driven by the MOF, makes the decisions here, like intervening when dollars in a weakening trend, when they know they've got the market on the side. They don't like fighting against the trend because they know it's just a waste of capital. So with the news flow this week, people want to diversify away from the dollar. We're seeing the dollar weaken across the board, except against the yen. This is a perfect environment for the MOF to kind of go, look, we want to intervene. Let's see what the action is after this. I repeat that I've done this hit not having seen this move when I walked into the studio.
Mark, would intervention work? Is this something that is going to have an effect beyond the short term, if it is intervention?
So it's a great question. Look, fundamentally, as you know, I tend to be a perma bear on the yen. I think it's a structural decline to go for a long time to come. That said, I think it'll work. So I don't think it's going to work on a super long-term basis. But in terms of a trading basis, yeah, I think this could turn the trend around for potentially months. So importantly, we're in a backdrop here of the dollar starting to weaken and people really want to get on that trade. This will kind of add to that momentum. We've just had dollar yuan fixed below 7. Kind of everything's lining up for dollar weakness. Now, if the BOJ are on board as well, it'll be kind of great for that trade. So people will push this trade. The macro community loves buying yen because they all trade off REERs, real effective exchange rates. I think that's a rubbish way to trade FX, I should say. But because it's used predominantly in the community, people always think yen is undervalued, want to buy it. With the positioning there in the market, I think this could really start a stop loss run if the MOF get really involved. So dollar yen could go quite a bit lower.